Well, good afternoon. Good afternoon and welcome. Welcome to another of our Webinar Wednesdays. And it's great to be with you again for week number 15 of our Managing Your Small Business in a Pandemic webinar series. Number 15, going back to March 18th, when we talked a little bit about the EIDL program, started talking about the PPP program and its effects on the 24th of March, and have been talking about both ever since. So good afternoon. My name is Kelly Bearden. I'm the director of the CSU Bakersfield Small Business Development Center, or SBDCs as we're known. And if you're here for the first time, welcome. A little bit about the SBDC program. It's a national program. It's in all 50 states, and it's available, services are available throughout the 50 states and also some of the territories of the US. Here in California, we're part of the Central California region, which is one of 6 regions in California. And we proudly serve Kern, Inyo, and Mono counties. We have 5 other centers in that region that are located at Cal Poly in San Luis Obispo. Up in Monterey County, we have one also in the Modesto area, Merced, and also the Clovis. So feel free to reach out to any of the centers that you see and reach out and actually inquire about services. So it's great to have you along today. We'll get into, I think, a very interesting program. It's Webinar Wednesday, and if it's Webinar Wednesday, it usually means there's breaking news on a number of fronts right before everything happens here on Wednesday. So we got a lot to cover. We're going to be talking about a lot of stuff. I know some of you are thinking, hey, last week you'd mentioned Keith Bryce was going to be on. Well, Keith is not going to be able to join us today. He's got a commitment with his national association. Like us, we have an association of SBDCs that represent our best interests across the country and are available to elected officials and others for one voice. Keith has one also called NADCO, which is the National the National Association of Development Companies. So hopefully Keith will be back soon, but if you're wondering where Keith is, no Keith today. So there are our sponsors. We're grateful for them and for able to make this available to you on a weekly basis, and have been making the webinar series available to you since January of 2013. Not every Wednesday like now, but about a couple dozen a year. So what's ahead? I know many of you have been along for the ride for a long time, and we've talked about many of the issues already with EIDL and PPP, et cetera. So what's ahead, and where is the particular Wednesday webinar program, Webinar Wednesday, where is it headed? We're going to continue as long as there's interest in talking about Kern, the Kern Recovers program, the PPP, EIDL, and new program updates, and get your questions. We're going to be including more resources as we move ahead, maybe not next week, as a lot of the breaking news dealt with while many of you are here today, and that's the PPP forgiveness efforts. But we want to include more resources and strategies and funding opportunities as the PPP money starts running out, and as far as business owners and entrepreneurs look for increasingly other sources of funds and revenues in order to carry their businesses so they not only survive, but hopefully eventually get to the point to where they thrive after the crisis. We're going to continue bringing in some great guest speakers and other web-based events from some of the other SBDCs in the area, our partners and colleagues, and we'll start bringing in additional versions of Webinar Wednesday on potentially different days than Wednesday. So stay tuned. We're going to have a lot going on. We're always available to meet your needs as far as one-on-one consulting and also the training aspect. And one of the events that we've done in the past is a thing called the Kern Capital Summit. We did that last year, about this time of year in Bakersfield, in downtown Bakersfield at the Tower. We were in East Kern for the East Kern Capital Summit, and also the Eastern Sierra region in Inyo and Mono County. We switch off between usually Bishop and Mammoth Lakes, and we will actually be doing a virtual, so it'll be a virtual event this year, which will showcase many of the different lending programs for those that are looking for funding as we move on. So in showcasing some of our partners, our counterparts, our associates, our very good friends at the Cal Poly SBDC, next week are going to be actually hosting their virtual Angel Conference. Now, an Angel Conference, for those of you that haven't attended, is an event to where you have a number of participants that come together. And what they do is they contribute a sum of money. I believe it's $5,000, and they all make a group investment into a startup company. So the startup companies start applying early and often, and they end up with about, I don't know, 50, 75 companies, 100 maybe, that actually apply. There are 6 finalists through pitching competitions and come down to the 6 finalists to where they pitch to compete for a $100,000 equity-backed funding investment. So that is going to be on YouTube next week. It's going to be virtual for the first time. So Tuesday, 4 to 6. If you're interested, you can go to AngelCon 2020 at Eventbrite, or you can contact us and we'll show you how to get there. A great opportunity to showcase innovative businesses and technology in our region, and also a great opportunity for investors to come across some potential deals that might be appealing and might be interesting. So keep that in mind. AngelCon is coming up, and that's one of the things we're going to continue to share with you. So what's new today? What's new today? It's June 24th. That's new. It wasn't that yesterday. So we have breaking news this morning on forgiveness. The SBA came out on some actual interim final rules that will actually be published on Friday. And it's kind of a newer trend with some of the things. Rather than just drop them out late Friday afternoon or early Friday evening, they are actually dropping them out on Wednesday morning. So it makes one SBDC director very busy on Wednesday morning. So just when I think I have everything all figured out and this thing is actually all put together, working on your questions that you've submitted, we get breaking news that kind of upends the entire apple cart. So we'll get to that. It's on PPP and it's on forgiveness. There was a breaking news also that came out about an hour ago about a small business grant program, $5,000 for smaller businesses and some requirements. We'll jump into that and just show that because it only has a 1-week period, and we want to be able to notify as many small businesses as possible of the $5,000 grant program out there. There was other breaking news in our region in Inyo County. Many of you, I'm sure, felt the earthquake in about 20 miles from Lone Pine, and our best go out to the Lone Pine community and Catherine New, who heads up the Lone Pine Chamber of Commerce, and others in Inyo County and our friends there. So hopefully I got a lot of text and emails from individuals up and down the San Joaquin Valley. In LA, it was a widely felt 6.1. And we haven't felt something like that since the 7.1 in Ridgecrest last year on July 5th. But we're going to get into current recovers today and talk about the latest loan and PPP information that's going on there. We've mentioned a couple weeks ago with breaking news that EIDL was coming back up. We're going to look at this time a little closer at something for those that were denied, and we're going to look at application reconsideration applications. So if you were originally denied your EIDL, here's a chance to actually go back and get a reconsideration, kind of appeal the decision, and we'll give you some hints on how to go about that. PPP is wrapping up, so if you don't have an application in, and we're pretty much done. And something else happened in the last week is SBA, there's another disaster declaration for Kern County, and that is for some damage to businesses and real estate. And real estate, I mean residents, homeowners can actually qualify for a SBA disaster loan for areas that were affected by the civil unrest. And there's only about 4 or 5 counties that I've seen on this declaration. And what happens with the declaration is, let's say you're in LA County and that there is, where I think that there's far more civil unrest damage than there is in Kern. If you do know of somebody in Kern County that had something damaged, a business, a residence, or whatever, love to talk to them and let them know about this particular program. But what happens is when there is an SBA declaration, originally, all the counties contiguous with that particular county are included in that declaration. So when there's one for LA County, San Diego County is included, Orange County is included, San Bernardino County is included, and Kern County is included. Maybe Ventura County, probably. So that declaration is open, and it doesn't have anything to do with the one that we're talking about today with the EIDL and the COVID-19. It is completely independent. So if you know anybody that has damages, and also we're going to get to your questions and your polls and much, much more. So let's go into the polling today. And through our friends at the Kern EDC and our friends at Chevron, we have a $100 gift card to give away today. So that's exciting. And rather than do the whimsical questions in the past, I'm going to gear this toward the PPP. Since we don't have time to cover it in an actual go to the website, let's just talk about what's happening with the $500 billion that's been out so far on PPP. And so the poll I'm going to launch is going to be a two-part poll. There's not a rush to get in. If you get both questions correctly, which I can tell you honestly, I would have gotten neither correctly. There's your hint. I would have gotten neither correctly. Then you're into consideration. What you can do is go to the chat and say, I got both questions right. And then we'll select a winner out of those that actually get both right. Not easy questions. So let me launch the poll. The first question is going to be, what industry sectors had the highest number of PPP loans? So we're looking at the percentage, not the dollar volume, not the number of loans, but the percentage in the industry sector. So the considerations are going to be construction, healthcare and social assistance, professional, scientific and technical, manufacturing, and accommodation and food services. So get in, get often. Well, you can only get in once, but do get in. And we've got about close to 50% of you that have voted. Give you plenty of time to get in because we want to make sure we give everybody a chance for the Chevron gift card. And as we get up to 65%, we'll give you about another 3 or 4 seconds. And then we're going to close this thing up. So get in now or don't get in at all. And we're going to end the poll just about right now with 78% of you voted. And I'll share the results. There they are. Half of you have accommodation and food services, and 15% for professional, scientific, and technical. And a late rush by the winner, healthcare and social assistance, with 12.8% of healthcare and social assistance businesses by NACE code actually coming in and actually is correct. I would have probably been with the majority here. Construction, which was a close second at 13%, and then manufacturing. So, boy, we have 13 individuals that are left that can still participate in this and win. But let's go to number 2. So poll question number 2 is going to be, what state has had the highest PPP percentage of small business loans? And again, we're looking for percentage. We're not looking for the amount. We're not looking for the dollar volume. So I'm going to launch that poll right now and give you 5 choices between West Virginia, South Dakota, Mississippi, California, and Nebraska. And it looks like California, percentage-wise, is the far biggest leader by running away with it. But we do have 4 other states that are in the running, and all of them have garnered less than 10% of the vote. We'll give you just another couple of seconds to get that in. We're going to end the poll. Thank you for voting, and share the results. And 69% California. Ooh. and everybody else under 10%. The winner, the state with the highest PPP, came out of the Midwest, and it was South Dakota. South Dakota, I think we mentioned earlier at the end of PPP1, the very first phase, the Midwest was really in strong, and it was South Dakota. Another question I would not have got right. So thank you. If you did get both of those correct, more power to you. Boy, I might have to find more gift cards if there was more than one person. So thank you for doing that, and we will now stop sharing the poll and move on. Okay. So next slide, please, is more breaking news. And it comes from our friends at the Opportunity Fund. And our Opportunity Fund is a lender that we work with, a nonprofit lender that makes a lot of smaller size loans. We've worked with them on some small food businesses. Their sweet spot appears to be about $30,000. You've really bailed out a few of our clients, really appreciate the work, but they came up and said that there's this Small Business Live Restart Grant Opportunity Fund program, $5,000. It's only open for, since yesterday. I guess it opened yesterday, not today. So eligibility, applicant must be the owner of the business, must have been in business at least a year since June 2019, meets one of the following criteria: entrepreneur of color or women entrepreneur, or business annual revenue of less than $1 million. So you can go to the website, either Opportunity Fund, if you know somebody who would like to get in on that. Apparently they're going to select on a random basis. Don't know how much money's involved, but if it's an opportunity to support our local businesses and our smaller businesses that could be struggling, it's an opportunity we really want to be part of. Okay, Kern Recovers. Kern Recovers, another great program that's doing just what I said. And the PPP distribution was announced last week, and it'll be live, I believe, on July 1st. So next week it becomes live, and the goal is supporting 5,000 county small businesses to open and to provide them free of charge with PPEs. They do have, we'll talk next about supplying them with PPPs, but let's supply them first with mask, wipes, sanitizers, and gloves. These are going to be widely distributed through the county, through their library system, and also their employment training resource centers. We call it ETR, the Employment Training Resource, also called America's Job Center, and countywide. And while you're at ETR, ask about some of the great programs for hiring individuals through the county's programs. And also, initially, there's going to be $5 million, and it's a 60-day program, and hopefully it can be expanded. I've got several requests. When you try to put in information on the Kern Recovers, you get, unfortunately, a lot of media sources before you get the actual website. But you really want to go to the county, which is kerncounty.com. And there you'll be able to find it. But if you go /government/Kern Recovers, will be all of their business, and it'll be all of their COVID-19 related information. And with that is going to be Kern Recovers, the Kern Recovers loan program. Applications are now being taken for both non-essential and essential businesses receiving a PPP. We've talked about this. 4 banks are actually doing it. Let me go to the site here real quick. Try to see if I can pull it up. Sometimes Google likes me in this program, and sometimes it doesn't. Oh, my lucky day. Look at that. So a little bit on this program first of all is number one, here's really something that is really interesting. I'm going to talk about this in a few minutes and give an example. But one of the things that's interesting for you Kern County businesses who received a PPP, and I've received a lot of emails from you out there. So if you're a sole proprietor and early in the process, there could be a few different reasons for this. One could be that, the first PPP applications started to be taken by lenders on April the 3rd. And then actually sole proprietors weren't actually eligible till the 10th of April. And so there was that big crush and big lenders were swamped. We were wondering if even sole proprietors would get in on April 10th. And so when they started taking him, lenders across the country were kind of mixed on if they would allow you to actually do your employees and your own income on your Schedule C, for example, on the same application. So many individuals did not, and fortunately, the Kern Recovers program saw that and came in and said, we will allow you, if you received PPP funding for your employees, to submit a separate PPP application to the Kern Recovers program. So it's not exactly the PPP, but it's the Kern PPP. So your 2019 net Schedule C profit can actually then, and you can contact one of the banks. So that is really, I think, really beneficial for a lot of you out there. You see from the website, it's interactive. I'm having a little problem with my map today. The map is up. It's just that I have a little problem trying to keep it in sync when I start playing around with it. You'll see the program is now up to about $10 million as far as the spend goes. And as it was kind of advertised when they came out with it, a lot of it was going to go to full service restaurants that did not receive federal PPP money. And the full service restaurants, really a tough place. And we also see drinking places and some of the others. So they give a complete list of all the industries on the website that are actually receiving funds. The map will actually show the location of each of them. So you see so far 370 businesses have been funded, constituting 152 industries, and the average loan size is about 25 grand. So that's a little bit more on the Kern Recovers. It's still open, still accepting applications. We have 4 lenders. Contact any of those 4 lenders, and on with your application you can go. So let's talk EIDL. EIDL is still, one of our favorite programs. And EIDL reopened on June 15th. And it's to all qualified EIDL businesses, which includes not only your small businesses, but it continues to receive applications from your agricultural businesses. We believe the maximum is still likely 150,000. We're asking people that if you've been denied, you can contact the SBDC and we can help you with your reconsideration. And we'll give you some of the tips right now on some of the reasons why you might have been denied. If you've jumped into your EIDL and you've spent a lot of it and you realize that you perhaps need more money, you can request additional funds and you can email. And I need to check this email. I never got around to doing that. It could be PDC@Recons SBA, Recons being reconsiderations. But I will verify that and we'll get that out in tomorrow's email blast, which will have a lot of different resources that we come up with today. And EIDL by the numbers, if we have a chance, we'll jump in and we'll look at kind of EIDL by the numbers. We talked a little bit about them last time. We'll see. So, so here's the decline. Here's the reason that we're seeing individuals declined, and the most common has been unverifiable information. And if you get a request back or you get a statement back from the SBA, either probably by email saying that you have been declined and the reason is unverifiable information, here are the main reasons why that could be. The first one is perhaps you have a new filing, you changed from a sole proprietorship to an LLC or S corporation, so you have an entity change. And the filing with the Secretary of State hasn't been updated or it hasn't showed up on the information that SBA receives. So they'll come back with a public records do not exist. And actually it won't even come back. It'll just be unverifiable information. So in some instances, the public records do not exist, and that is a decline. We're seeing a few of these as far as citizenship-related issues. And it could just be as simple as the box isn't checked. It is a computer-generated and scored application. I believe we've had one client that actually, in a reconsideration process, noticed that the box that said, are you a US citizen, was not checked. But it could also be something related to proof of residency. You might need to provide information of proof of residency, or it could even be something related to a green card. A very common one also is incorrect banking information entered. So on your EIDL application, when you went into the portal, you recall actually seeing the banking information. At the top of the banking information was an area where you could click to receive an EIDL advance of up to $10,000 based on one employee, $1,000, 10 employees, $10,000. Underneath that was the banking information that had the name of the bank, account number, and the routing number. So if any of the numbers were transposed there, if some banks have multiple routing numbers, given their geographic region or others, so if you got the wrong routing number, that could also kick an EIDL decline based on unverifiable information. You know, if a client has an open bankruptcy in process, that could do it. You know, there was a lot of interesting stuff that was happening last week as far as lawsuits for SBA's PPP and EIDL programs. And mostly with the PPP program, there was one that, because of the felony exclusion, there was a lawsuit that was filed, and there was also one dealing with individuals that could not get funding because of bankruptcies. If a client has an open bankruptcy in process, oftentimes that is declined because of the unverified information, and it all relates to the bankruptcy trustee during an open bankruptcy must approve any additional debt. So to take on any additional debt requires that trustee, and if you can identify that as the issue, there is a possibility that the loan could then be approved. And the last and most and a common one, not as common, but is if you're a franchise, you know, you probably are aware that the SBA has what is called the franchise registry, where they have vetted franchises across the country. And if you're not in the SBA franchise registry, then generally you are not eligible to participate. If credit history was an EIDL decline, applicant's credit history is checked. So when you get into that, and I think we've mentioned this a time or two, your credit history will be checked. A lot of people, because of identity theft, put a hold on their credit and do not allow an inquiry because they don't foresee any happening. And if you forgot that you had that on there, it'll come back as a denial. If you do get a denial based on credit history and you think your credit score is sufficient, pull your credit. You need to actually look at your credit report and you need to verify that it's correct. There could have been instances when you got a deferment. You heard us yell loud and clear from the early get-go that you need to try to defer all your expenditures that you can. If you got a deferment early on, and then it came back and said that, you know, somehow you ended up with a 30-day late, that will affect your credit dramatically. So verify that it's correct. You know, SBA does not generally publish the credit score, because I know I asked last week again. If memory serves me correctly, 11 months ago when we were dealing with the Ridgecrest earthquake disaster, the credit score, I believe, was 650. I think during the beginning part of our process, it was 650 this year. You know, I ask, I don't get an answer, but I will ask continually. And I'm anticipating, if you wanted my best guess on what is the credit score for the EIDL, I would say it's less than 650. I believe at the 650 level, I think SBA was getting a lot of rejections because of the 650 score. And it seemed like when they were about ready to do some changes to the program, maybe change the portal and things like that, that the score might have been lowered. But I would anticipate it only being slightly lower. So, and always when you correspond with SBA, a couple things you always want to remember is if you want more funds, if you want to do something, if you get declined, whatever the case is, please do not refile your EIDL application. All that's going to do is create additional hardship on you because it's going to confuse your application and get it basically tossed out, and even more time is going to ensue. So also always when you correspond either by email or by talk to them on the phone, have your application number ready. And if it's by email and you've provided them some attachments, list the attachments that you are providing them. Okay, let's move on to PPP. And PPP, you know, this number keeps going up. I remember like a month ago, we were talking about, gee, we have $100 billion left in the PPP, and that was 110 and 20 and 30. So the latest number I heard was 150 billion is left in PPP. So that's going to bring up a whole interesting question on what is going to be done with the 150 left. What are going to be done with the leavings of the PPP? And we've talked a little bit about this in the past, that there might be some more prioritized or focused payroll protection delivered. We talked a little bit about the accommodation and food service industry. So it could be something that is geared towards specific industries that are more hard hit. And it could also be as more information comes along. I mean, we all get smarter as long as this thing goes on and get more information on how long it's going to take to get businesses back and other things. So we anticipate that that is going to be the case, is that there will be some additional programs, and we'll see those maybe geared along a lot of the events that are going on in the country today. So we do have the drop dead date, and it's only 5 days away, and that's the lender submitting to SBA. So really, you're really down to today if you really want to get in. This slide was not updated after the breaking news, but no new PPP. Let me change that to yes, new PPP SBA Interim Final Rules guidance, and we'll get into that. That'll be 7 slides toward the end that I hastily put together. It's going to be heavy word. It's going to be a lot of interpretations, but a lot of the interpretation, a lot of the issues we had in the past got resolved, and will be resolved with the publishing of that on Friday. And some more of the analysis on PPP, on what we're doing as far as the Excel spreadsheet and a lot of the guidance that we have there. Another piece of information that came out in the last few days is that the Treasury has kind of backtracked, and they said they will release the name of borrowers who received at least PPPs in the amount of $150,000. And that is going to be released based on 5 different category sizes. They're not going to list the name of the business and the exact amount of their PPP, because we all know the PPP formula, and you can go back and you can figure out basically what their payroll was of your competitor. And you could also go in and you can figure out if you get some interim financial information, like say Robert Morris and Associates gives a nice collection of say 100 businesses and their financial information for tire stores. And you can go in and you can pretty much, based on the levels, just try to figure out what their business financials look like, or a lot of them. So they're going to just do it in range sizes from $150,000 to $10 million. They're doing this, they say, because they had bipartisan support from both sides that wanted more transparency and total transparency in the program. And with that comes the fact that 75% of the funds were loans of $150,000 or more. So whereas there's far more smaller loans, 75% of the money went to larger size deals. So if you got a PPP for less than 150, they're going to break down another segment of demographic information by, say, zip code, industry, and business type, and various other demographic categories. So I think what they'll do is, if you're under 50,000, they'll list the name of the business. They'll list the zip code you're in, the type of business that you have. So not something that was anticipated, but something that has happened, and it's accountability for the program. Congress wants it, and so the SBA and the Treasury is going to provide it. Moving right along. Okay, so let's get into the act a little bit. And I had planned to spend a lot of time in the spreadsheet today and with your questions that you had sent in. I apologize, we got, you'll find out in a minute why we got diverted. Just a quick background on what we've talked about the last couple of weeks is the PPP Flexibility Act. And there you see a number of the changes that have happened, and really kind of the main changes that happened with the program. We'll do this as just kind of a little guidance to let you look at to remember these rules as we get into some of the final rules that were announced earlier today. So everybody loved some of these, like the 60% payroll. Well, we determined a couple of weeks ago that that's not a cliff, that that's a sliding scale if you don't hit the 60%, that now it's a 5-year loan, potentially, as long as your lender, if it was before June 5th, if your lender agrees. Provided conditions for the FTEs, and gladly, that was actually elaborated on today. So let's get going on this. You know a lot of these already from seeing there, but there's the backdrop to what we're going to be discussing. And let's get into the final rules. And these are just, again, verbatim, the final rules that were announced this morning. And of course, you know, I got up nice and early and I looked this morning, or nice and early, and just said, okay, there's no new news. Okay, we're looking pretty good. We're set. And then happened to bounce back about 10 o'clock, and a couple hours earlier they had released, and it was press was reporting the interim final rule that'll come out Friday. And so in this, it kind of states what we talked about last week, and it confirmed at least what I had figured, that the cap was going to increase from the 15,545 to 20,833, but they had especially had mentioned businesses in Schedule C and Schedule F. Well, they clarified that in a big way, mentioned that it is now across all businesses. So all businesses, which we'll talk about here, if you're an owner employee in a a C corporation, and it talks a little bit about, and we won't get into the, because of time and the fact that I haven't had a chance to digest the retirement and insurance contributions, but it is mentioned in this as well. We will cover that in a little bit more detail next week. But S corporations, same thing. If you're an S corporation, and even though you are an owner employee and draw a paycheck through that entity, you are not able to access the 46,000 plus that you can actually max out on for an employee. So you have to have the same limit of the 20,833. So C corporations, S corporations, and also it mentioned Schedule C and Fs. So this is not a really great surprise, at least to me. It did leave the door open where there could have been potentially something that that came out otherwise, but they wanted to apparently nip that in the bud and start with that. And then also general partnerships. The general partners are capped by the same amount. It's just that they are, and we haven't mentioned this, I don't believe in any of the previous 14 webinars, is that they are actually multiplied by the 0.9235, and which accounts for the Social Security portion for the owner of the business. So they reduce it by the Social Security amount. So the retirement and the health insurance contributions, as I said, didn't get into that. We will get into that in a little bit more detail next week. So the next final rule, of which there were only three good ones though, or at least that one confirmed. Another question was coming up on when a borrower could apply for loan forgiveness. And one thing that we'll talk about when we hit the spreadsheet today is the covered period is really going to be part of something that you really manage in managing your PPP for many of the small businesses. You know, a lot of people went through and they, in 8 weeks, were able to actually go through. I have a number of people who are ready to actually do the loan forgiveness. And until today, I had not heard of a single lender who was willing to even accept one because of waiting for these final rules. Number one, they wanted to make sure that they were able to not have to wait to the end of the covered period, which SBA came out and said, yes, you may submit a loan forgiveness application anytime on or before the maturity date of the loan and before the end of the covered period. Now, the next part of this was a little bit unwielding for me because I know you're going to ask me this question. And it says, if the borrower has used all the loan proceeds for which the borrower is requesting forgiveness. So I just answered my own question. I was a little concerned until the last part of that you might, if you weren't going to use all of your funds for forgiveness, if it would be interpreted that since you didn't use all your loan proceeds, but when they added which the borrower is requesting forgiveness, bingo. So you can, even if you haven't reached the end of your funds, if you don't think you're going to use all your funds, and we have seen people that have said, I'm not going to probably use all mine, I might not even stay in business, so there's always that concern as well. So you're going to be able now we now see where you can start the loan forgiveness process. And now I would expect this is going to be a process we're going to want to continue to work with your lender and to try to get guidance from your lender. Some of them are very good about emailing and providing websites. Some of them are probably going to have a web presence if they don't already. They're just waiting maybe for all the final rules and the final expectations before they do so. But now it looks like there's going to be an opportunity for the forgiveness process to begin, and it begins right here, right now. So as part of that final rule, you know, it's the FTEs, and we've talked about the FTEs, haven't we? So the full-time equivalents that we've looked at in the past, trying to figure this out has been one of the bigger sticking points that we've seen. And again, I wasn't able to really digest everything. I tried to bullet the high points. Again, you're looking at the interim final rule, which is scheduled to be published on Friday. So it really comes down to a couple of key words in here for me. And one of them is good faith. If the borrower is able to document in good faith, an inability to rehire individuals or hire similarly qualified individuals, two very, very generic terms that caused a lot of heartburn for our small businesses. But then they also threw this little clause in at the bottom that I had to bold because, you know, we had talked about that borrowers, it didn't say they were required earlier, but here it said they're required to inform the applicable state unemployment insurance office of any employee's rejection for rehire within 30 days of the employee's rejection of the offer. So now the onus is back on you if your employee doesn't want to come back. And there are a couple more issues that make this a little stickier as well. But really within that 30 days, you really need to, if an employee doesn't come back because of unemployment insurance, you really need to look at that particular aspect. So then the compliance came out because we've received a lot of, can I do a text? Can I do a voicemail? What is the actual criteria that shows that I have good faith in an employee that doesn't want to come back? Well, it says, everything it says written offer, written record of employee's rejection, and a written record of the efforts to hire a similarly qualified individual. But if you look up there at the bold, but are not limited to. So they include, but they're not limited to those that are written. And I know a lot of individuals correspond by text. They use Slack or Bench or some other app, and getting a written record of things isn't so easy. There are voicemails like, this is my notice, I'm quitting, on a cell phone, and other things like that. But I think what you really need to do is you really need to follow through with the written aspect of that in order to try to get that individual to get something in writing. And again, it's going to come down to the bank. The bank is going to be the one that determines if that is, it's not going to be the SBDC, it's not going to be the SBA. It's going to be the lender who actually decides what they really want to see in that regard. But while you're separating and hiring people back and people aren't coming back, it's best to, as we have mentioned, to try to get something in writing. So then it comes down to if the borrower is unable to document in good faith. And really what stood out to me was that phrase, in good faith. An ability to return to the same level due to compliance. And this is kind of the second phase that came out in the PPP flexibility. And I think this is important because what it does is it really shows, it says due to compliance with the requirements and guidance issued by, well, 3 major health entities, including the Center for Disease Control, but also there's others as well. There's the Occupational Safety and Health, and then also some of the others. But what stuck out to me in this, at least initially, was specifically borrowers that can certify they have documented in good faith, again, it's good faith, that their reduction in business activity during the covered period stems directly or indirectly from compliance. And in the next page of this actual final rule, it is going to actually get into, it is going to be, you're going to need the documentation of the compliance. So you're going to need that in order to say how you actually participated in that. But also it's going to include other things. So down below the last paragraph, and these aren't broken off into paragraphs. I did this to try to make it a little bit easier to read because I know this is a lot of language in a very short period of time. But the administrator and the Treasury Secretary interpreted it to both be direct and indirect compliance with COVID requirement or guidance. That, I think, is really, really important that they included the word indirect. So direct and indirect compliance with the requirements stemming from the reduction of business activity. And also it includes keywords down here, state and local government. So you have the 3 federal sources, but they're also coming down and saying, in my interpretation of this, that states and localities are going to have some say in this as well, as far as if you can get your business up and going and if the shutdown orders have been impacted. Okay, so a lot to digest and some more to go over, but definitely some 3 really big points. We confirmed what the payroll, the maximum payroll is. We also were able to get some forgiveness dates as far as now our covered period, and also the FTE, hiring back the same number of people you had on February 15th, or directly or indirectly by complying with federal, state, or local rules, or unable to do so. Okay, so let me jump in here real quick. Got a little bit of time left. I'd planned to spend a little bit more time in here. So by now you've seen our PPP by the numbers. This is number 15. And I wanted to just show you a little bit about how it affects that first case that we looked at today. With the sole proprietorship and also how it affects. So you've seen this. This is Kelly's Grill. It's an LLC, and basically the owner's compensated to $120,000, of which only $100,000 is viable. This is kind of the P&L, and then you saw the calculation. So one thing that I really think it's important when you go back to forgiveness and when you manage this thing down is to look at your original loan application. Look at how you came up with this number. Most people, it's just going to be payroll. It's going to be your W-3 form at the end of the year. It's going to be your collection of 4941 federal quarterly payroll tax reports. Those are going to be the things that are actually doing so. But then we get into the situation where you have the self-employed who are also able to draw on their earnings that they have, their paycheck that they're missing out on, and also on many others. So this is the calculation, $100,000. You've seen that before. Good for Kelly's Grill. There we go. Well, you know, Kelly had a friend named Fred who really liked what he was doing, but decided to add a bar to it. Add a bar, higher margins, a little more headaches, but so it's Fred's Bar and Grill, or Grill and Bar. And so basically, let's look at this basically along the same tune of the same revenue. The purchases are a little bit higher because of the booze involved, payroll expenses. And so this is Fred's calculation of when he did it. And he was on a Schedule C, and his lender came back and said, no, we can only do your employees. So on the calculation, you see his annual employee, he only received $87,500 based on his $420,000 of annual payroll divided by 12 months. There's your average. And the 60% level for meeting the full, potentially the full forgiveness. So let's see what happens now that they can go to Kern Recovers. So now Fred can go to Kern Recovers. See, if I'm owning Kelly's Grill, which potentially I am, I'm saying, hey, Fred, I got 100 grand, you got 87.5. So now Fred comes over here and he says, well, gee, the Kern Recovers program will now cover my paycheck that I missed out on, because that's essentially the difference. He had a higher a higher payroll by 20,000. And, or actually didn't, but in this calculation, there's how that works. But then you pull in the Kern Recovers. And what it shows now is if he would have been able to use the same method by having the payroll been 109, but also here with Kern Recovers, it's up to 127.5. And the reason it's $40,000 more is because with the Kern Recovers, it will allow payroll. And this I think could be incorrect, because I believe they were basing the maximum off the $15,545 before the flexibility rule. So this could be a little less than this. But if it wasn't, by getting the 4 times, it shows you the difference in the impact that it can make. Along those same lines as we have Mom and Pop that you've seen before as well, with just Schedule C and no payroll. And you see now that their multiplier, whereas it was earlier, 100,000, numbers have changed over the time, but at 100,000, they're able to now pull in the full amount as much as anybody else from earnings from that covered period of 20,883. So I had projected to get into here and to look at a few more things. Just a quick update on our forecast, because I do want to get into your questions, and it looks like we're running late as always. So just a little bit of updating this. And what this did was, when I got into the detail down here, was by taking more salary for the owner and by keeping the number of employees, not knowing when my employees would hit. It seems like now I just needed to cover that during the covered period, which I've done. There still could be some regulations on, but it seems covered. We'll go into this next week about after any layoffs you have after, but it seems like everything has been covered now and you're okay. So that's just an update on a little bit of what's going on. And again, I really think it's vitally important to try to manage this particular grant program. We'll call it a grant program, the PPP loan program, down. Some of the big things you'll see here is that, when my payroll was covered by SBA, I was having as much as $7,843 that was covered. When I start getting out of that particular area, I run into areas to where that payroll is going to stay about the same if I keep those same number of employees. But yet these are the amounts that I'm getting covered: 4,800, 4,300, down to 29. And so that other is coming out of cash flow. And it's important to recognize that it's going to be, unless new regulations and new programs come, you're going to be on your own again before long. Okay, so that'll be available. It'll be much more detailed potentially next week with the additional changes, but that is what we have there. So if you have questions, hopefully I answered a number of your questions that we received the last few days. But if you have questions, hit that question box and let's go there. Okay. Who can I contact to make sure I filled out the forgiveness form correctly? SBA, or, you know, I would start with your bank. And, you know, I would start with the bank, and because the bank is going to be going through that process. I think it's important that you have the documentation when you meet with the bank. But if you have a professional that you work with, obviously they would be able to do that, make sure it's correct. But I think when it comes down to it, it's the, you know, a lot of this is about filling out the form, but a lot of it is getting the form and then talking to your bank and going through the process with your bank. And online, it's going to be an online form. But, you know, at the SBDC, we could talk to you as well. Be glad to help you, Roger. My nonprofit receives a Kern recovers loan and has given me 2 weeks to sign the docs. It has a 16-week covered period. That's true. And forgiveness begins with loan issuance, and loan date started in the docs June 23rd. Okay. Well, good to know. I have the tendency to forget that we have 8 and 24 weeks on the federal side and 16 weeks on the Kern side of things, and forgiveness begins then. And then Jim asked the question, is the loan issuance different than the loan date? No, those two are the same. The only thing that would be different would be the application date. And I think we saw in Kern Recovers, it was running about 15 days, of which I think the reason from application to funding was so long. I think Jim mentioned earlier when he was on a couple of weeks ago, was because they are accepting application from PPP borrowers, but they are not going to implement them at this time. Can a sole proprietor with employees apply for a PUA? You know, I started to answer this question for you this week on email, and I got distracted. And then I started wondering about it myself, if I even knew the answer. I believe what you can do is you can apply, a sole proprietor can definitely apply for a PUA. I believe there are restrictions, though, if you take as a sole proprietor through the PPP program at the same time to take the unemployment. So I think it's a one or the other, but I will get you a final answer on that. So I think that's the issue. The issue comes down to you can't be paid out of two different sources. Okay. I did not get the contact information for the $5,000 grant opportunity. Could you please repeat it? Yes, it's the opportunities through the Opportunity Fund. I think if you Google Opportunity Fund, you can get that information. If you have a hard time finding it, send me an email, kbearden@csub.edu. Yes, Maggie, that is something I left out also. The Kern Recovers PPP or PPE distribution is for 200 employees or less. So if you have 200, and the question here is full-time equivalents. And so I don't know if there's a distinction between employees and full-time equivalents there, but I think that that is a question I could get answered for you. So again, that's the Opportunity Fund for the $5,000. I don't believe, for those of you that are asking about which individual banks are accepting forgiveness documents at this time, right now I don't believe any banks are. I think that maybe you might hear something by, and that's not going to publish until Friday. So it's not going to be official till Friday. And so I think you'll start hearing something potentially next week It's going to take a little bit of training on their part. And I know some lenders are going to offer webinars in order to try to assist you in doing that. Some of them are going to be implementing online processes. So I would say next week is going to probably be early, but it is getting close now. We at least have the information this morning that we are close to start seeing those happen. I know many of you have mentioned you want to get them off your balance sheet, you want to return to normal accounting, and so that should assist that happen. It's a question. We were funded for the PPP for employees in April. At that time, owner draws were not allowed. You must have been during that period between April 3rd and April 9th. How do we now add that how do we now go about applying now that that's allowed? You would need to not apply through PPP. There is no other, don't apply if you already have a PPP loan. You only get one of those. So if you are in Kern County, what you can do is you can go through the Kern Recovers program and talk to any of their 4 lenders, which are Alta One Credit Union, Valley Strong Credit Union, Valley Republic Bank, and Mission Bank. So now with PPP forgiveness changed to 24 weeks, do you have to use the 8 weeks consecutive, or can you use the weeks periodically through the 24 weeks? And you can actually use the entire 24-week process. Some people are wanting to wind it up a little sooner so they can do what we just had mentioned about potentially getting it off their books and getting it resolved and maybe beating the rush, who knows? Or maybe the rush will happen sometimes now. So with the extended period, again, that is being able to use the entire 24 weeks to do that up to those certain employee and owner maximums. But really there is something else. You have to remember that your period of time is extending by 3 weeks, but your amount of your PPP is not. So once you start paying individually, if you continue to pay certain individuals over a 24-week period, with that, it makes it harder to actually meet the first limitation on the full-time equivalents and getting full-time equivalents and hiring everyone back. But there is, of course, the second exemption that you could qualify under that we discussed today regarding the 3 federal agencies and also state and local guidelines that might impact your business getting back. That water's good. Nothing like 105 degrees here in the southern San Joaquin Valley. Okay, so still not sure of the timing to meet the threshold for forgiveness. The timing is you have 24 weeks. You can elect, it is elected. You have, if it's before June 5th, if it's after June 5th, you have a 24-week PPP. So if it's before, you can still elect to do 8 weeks if you prefer. So, and the threshold is if you do elect to use 24 weeks, you can use it a longer period of time. The Flexibility Act was for that purpose because so many businesses couldn't open and wanted to have the opportunity for them to actually move on and actually do that, be able to spend their funds. So hopefully that helps. Received an EIDL originally for one employee $1,000, then received a $10,000 EIDL loan. Is that forgiven as well? Well, I like your use of the word well. Well, no. The $1,000 EIDL is forgiven on the advance if you do not receive a PPP. So you had mentioned the EIDL advance and then the subsequent afterwards, you received the EIDL loan. So that is not forgiven. The $10,000 EIDL loan will actually include a note that you'll sign, and the loan will actually be 30 years at 3.75%. Can I use PPP to pay employee portions of health insurance? Hey, that's cheating. Or actually, it's not cheating. Yes, you can use it to pay an employee portion of health insurance if you had the health insurance in place before all this happened. Now, when I had mentioned that's cheating, I said I hadn't had a chance to look at the owner's portion of that, to look at the owner's health insurance and retirement. But yes, you can do it. You can use PPP funds to pay the employee's portion of health insurance for a policy that was in place prior to February 15th. One of our lenders for the Kern Recovers said that a business that received a PPP does not qualify for Kern Recovers. Has that changed? Officially, it has not changed yet, except from the standpoint that you can actually do it. We went over the guidelines. If you are an owner that did not receive the self-employment portion in addition to the employee portion. So it has not changed, though, if you've received a PPP for your employees and you want a Kern Recovers, but the Kern Recovers will potentially open to PPP businesses maybe sometime in July. We looked today and Kern Recovers has $10 million spent out of $25 million. And they had mentioned that that it's possible that it will be open to PPP. I think I mentioned earlier that they are accepting applications from those from PPP. I believe I misspoke. I believe they still are not accepting applications. What they were accepting were essential business applications from the get-go. And at first, they were only looking to fund non-essential businesses that were closed down. So thank you. That helped me correct that. Okay. I think that's about it. Maybe let me run over to the chat for a minute because see if we're in here. I'll start. Let me grab some of these out of the chat real quick. Can I have the a website for AngelCom again? Go to the Cal Poly SBDC and you will find it very easily there. Cal Poly SBDC. Felt the earthquake in Bishop. I guess. Yeah, he probably felt it pretty good too. Grab some questions out of here real quick. Again, for the Opportunity Fund grant, I would just Google Opportunity Fund and go there. I can provide the URL. It's very, very, very long. And I won't be able to type it up and ask questions at the same time, unfortunately. So if you do not find it, send me an email. I gave you my email address earlier, and I will gladly send that to you. I was approved for EIDL, but still have to go through the credit application. As an independent sole proprietor, does this affect my unemployment? For EIDL, I do not believe it does. Let me get you an answer on that. But I do not believe it does for self-employed unemployment insurance. It's just that because for EIDL, you know, boy, unemployment for self-employed individuals is so new. I think it affects PPP, but not EIDL. But let me get a answer for you. And again, the Opportunity Fund is where you want to go for that $5,000 and only have about 5 days to get in on that. So I think that's it. So, well, thank you all again for joining us. It's great to have you on here, and we'll be back next week. We'll get into this a little bit more and start bringing in more resources and more talent so you don't have to listen to me. And that's going to wrap us up. So, you know, have a great day. I was going to say for my special guest, but I don't have one. So for myself, have a great day and we'll see you. Bye-bye now.